Oh, wow. It took, hello. It took forever to get on.
All good. It's all good.
Hello. Hello, hello.
All right, so let's go ahead and get it. Go ahead and introduce yourself, Sharon.
Hi, guys. So, my name is Sharon DaCosta, and I am a new build and a relocation specialist here in the Houston area. I've actually been in sales for over 15 years and been a licensed real estate agent for four. Um, Most people ask me how and why I got into the business, and I pretty much tell them because everyone thought I would be a really good real estate agent. So that's part of the reason why I got in. And I absolutely love it. I love helping people. So that's my story, and I'm sticking to it.
Awesome. And my name is Chris Marshall. I am a mortgage loan originator with Apex Mortgage Group. I've been in the business for 8 years now, and love what I do, and also love working with Sharon. So she had a great idea of a topic that we want to discuss today, which is private mortgage insurance, um, which is extremely common and not many people know about it.
Right.
So I guess what I'll do is I'll start off by explaining exactly what private mortgage insurance is on a mortgage. So just simply put, private mortgage insurance is insurance that a buyer pays in case they default on the mortgage. So it covers the lender's investment, and makes that loan less risky so that a lender will actually do the loan. Without it, everyone would have to bring 20% um, down to close. So it's actually a good thing to actually know about this because not many people ask me about it. Um,
And
so
why do you think that? Why do people not ask about
uh,
mortgage?
it's just it's just
They
not.
don't know to ask you because they don't
Yeah,
know
I
about
don't
it?
think a lot of people know to ask me about it until they actually get disclosures and they see a number on there. What happens? Yeah, they see a number on their loan estimate, and then we'll talk about it. Then, hey, what's this? It's mortgage insurance. What's that for? Then I'll explain it. But yes, it's probably maybe one out of five or six people ask me about mortgage insurance, and and no one ever asked me up front. Um, but let's get into when do you have to actually pay for the mortgage insurance.
Yeah.
All right. So on a conventional loan, you will have mortgage insurance if you're putting less than 20% down. Right. The, the only way to get out of the mortgage insurance is if you either put 20% down or you do an FHA loan, not a FHA, I'm sorry, a VA loan, which does not have mortgage insurance, or a non-conventional loan, like a non-QM loan, which also wouldn't have mortgage insurance. So a lot of people get it confused. So FHA has a type of mortgage insurance, which is MIP, right? Mortgage insurance premium, which is actually a little bit different
Mm.
in a few ways. One way is you will always have mortgage insurance on an FHA loan, right? You cannot get out of paying the mortgage insurance on an FHA loan unless you actually refinance into a different loan, such as a conventional loan, right? However, there's ways that you can minimize the mortgage insurance premium, such as if you have a higher credit score, your mortgage insurance premium will be lower, just like any other type of insurance. If you put more down, more down payment other than the 3.5%, the mortgage insurance premium will be lower as well. Same with the private mortgage insurance for a conventional loan. The higher your credit, the lower the premium.
Yeah. So how do you calculate that in the mortgage? How is that calculated? Like, what's the estimate? Like, what are you looking at are you paying monthly, quarterly, yearly?
Good question. So how do you calculate it? It's going to depend on the program.
Okay.
So it'll be anywhere from 6 to 35% coverage of the loan amount, right? And typically it's paid monthly. Now there's different ways to pay it, such as there's lender paid, which it's paid, basically it's paid in the rate. So you'll have a higher rate. So you're not paying it monthly, you're paying it within the higher interest rate, right? So that's an option that people can look into. There's a split payment where you pay a little bit, you pay like a down payment of it up front to have a smaller monthly payment over the life of the loan. So it's like a hybrid type of premium. But the most common is just the monthly payment, right?
Right.
So we actually have a question in here. What does mortgage insurance cover? Mortgage insurance covers the mortgage, right? So it's only the only benefit of mortgage insurance is if you default on your mortgage and the mortgage company has to foreclose, then that mortgage insurance covers the bank. It covers their risk.
It doesn't protect the homeowner. It protects the lender.
Right. So lending is risk-based, right?
Right.
And how we see it is if you're putting the least amount of skin that you have in the game, the more likely, when I say skin, that means the least amount of money that you put down, the more likely it is that you will default on that mortgage, right? So that mortgage insurance actually makes you less risky, and that will allow for a bank to actually lend you money when you're putting less than 20% down.
Gotcha.
So it's a good thing, because if everyone had to put 20% down, a lot less people would have homes.
Do you encourage people to put 20% down? Is that something that you ever do? Is it like, hey, is it beneficial for that person to put down the 20% versus the 3 to 5% down?
Yeah, so it all depends. It all depends on the person. Depends on what they're trying to accomplish. It depends on if they're disciplined or not as well. But in most cases, I would advise to put the least amount of money down and keep as much money in your pocket as possible.
Okay.
Right, so that you can actually make a payment. Because I mean, really, maybe $100. It might putting more money, that like 20% down, that might change your payment. I don't, $150, $200, depending on the loan size. So I'd rather keep that money in your pocket in the case, just to make those payments in the case of an emergency, than to actually have you put it on the mortgage at the time that you purchase it.
Right.
So I would always, in most cases, I wouldn't say always, but in most cases, I would advise to put the least amount of money down as possible.
Right. Okay.
Because I mean, as long as you can always refinance out of mortgage insurance, right? And then if you're on a conventional loan, it will automatically cancel once you have 22% equity. So that means when the LTV, the loan to value, is 78%, it automatically cancels anyway,
Mm-hmm.
right? So I would, I would, I would suggest in most cases that you put the least amount of down as possible.
Okay. So what would be, I guess you discussed it, what are the pros and cons of PMI?
The
Like what are the
pros,
pros, yeah, and the
yeah.
cons?
I mean, the pros are it allows for more flexibility. That's the reason for the insurance,
Right.
to hedge risk, right? So it will allow for less than 20% down. It will allow on FHA loans. It will allow for. I mean, you can buy a house with an FHA loan at a 500 credit score, right? With 10% down, and that's mainly because FHA has the mortgage insurance premium. They have a fund that they have in case of defaults. That's why lenders will actually write loans with
Mm-hmm.
with the borrower that has a 500 credit score.
Mm. I had a scenario. I had a lady just recently that said that she wants to get into a loan. She has her own, I guess, I don't know what she's doing at this point, but she's like, I want to get into a new build, but I do not want to pay the premium. Um, so she and I explained to her that you know, in order to do that, these are the things that you have to do. So if she has an FHA loan, because
Mhm.
at this point in time, we don't know exactly what program she's with. So
Correct.
with FHA, you're saying that
You
she
always
still
have. She
has to
always have.
pay, regardless of she's paying that down payment, she's still responsible for that amount each month.
Exactly.
Okay. So I want other people to understand that if you do have a FHA, regardless of the circumstances, if you put down 3%, if you put down 20%, you cannot get around paying that premium a month.
Right. Now,
So
if you put more down than 3.5%, say you put 10% down, th- that will lower the
the more,
mortgage insurance premium,
yeah,
because remember, it's a percentage of the loan amount,
right.
and then also your credit score. So there's multiple factors that go into it, just like any other insurance.
Hmm. Okay. Cool beans. And then as far as PMI, so that's pretty much what we just discussed. What are the pros with premium? I'm sorry, with PMI, because we know that you.
Yeah,
What's the pros?
that's
Or
that would be the pros.
hmm
The main pro is that you can put down less than 20%.
less than 20%. Okay.
Right.
Yeah. All right. Yeah.
And that's on conventional loans. Now on FHA, the pro is the lower credit scores. You have the lower credit scores, the higher, and then you also have a higher debt to income ratio that FHA will allow you to do. Um, because that like higher debt to income ratios and low credit scores, like banks don't wouldn't really want to do that, but FHA backs those loans with that insurance.
Yeah.
So there, there's really what risk do we take if it's insured, right? So that's why it was put into place to make pretty much to make banks have more flexibility,
Right.
so we can lend to more people.
Right. Does anyone have questions regarding PMIs? I can't, you know what? I can't even see like
You can't see any questions.
anything on my end.
We only have one question.
Yeah, I don't see anyone on my side at all.
Do you so
Really bizarre.
so how often do you get asked about private mortgage insurance?
I don't.
You
I
know?
don't. No. It was just the situation I had recently where she was like, I want to get into this loan, but I want to pay, I don't want to pay a PMI. So it was something that I was like, okay, no problem. Just make sure, you fulfill XYZ in order to prevent that. But again, I'm not even certain what type of loan she
Yeah,
has or
and really,
program.
and really, it's not it's not that much. I mean, I think I had one earlier today. He's buying a $584,000 home, and the mortgage insurance is $170 a month. But
Yeah,
he only has to put down 3%. So he's a business owner, and he's looking to buy other properties and do other things with his money. So in this way, that $174 is nothing to him because he can take, his
right,
50,000 dollars and put that toward buying another investment property or putting that into his own business. So
right.
private private mortgage insurance, MIP, the mortgage insurance premium, it's not a bad thing. It's not a bad thing. It's actually a good thing because it allows us to lend to a lot larger group of people. That we really wouldn't, like, banks wouldn't lend to someone with bad credit or a high debt to income ratio before. If
Right.
so, yeah, it's a good thing.
Yeah, that's great. So we have several programs that can assist with people, that are in those different circumstances.
Right.
So do we have any questions? It doesn't necessarily have to be about PMIs or anything like that. So I don't know.
Anything real estate specific
Yeah,
or
real estate
mortgage.
related. Geez, I just drew a blank. I typically have tons of questions. I do want to mention that I also cover the Dallas market. I know some people are a little bit questionable, like, okay, where are you at? What other places? I'm actually working on covering Georgia. So that
Yeah,
should be before the end of the year. So I will be licensed in Georgia. I'm just right now looking for a brokerage out there.
yeah, I can help you with that.
You can help me with that?
Yeah, I'm licensed in
Yeah.
Ohio, Texas, Georgia, Florida,
Yeah.
and I'm waiting for my South Carolina license to get active.
Yeah. So anyone that's looking in the Dallas market who's relocating, because again, as I mentioned, I am a relocation specialist. So I go further than just finding you a house. So if you're coming from, let's say, Chicago, and you're not too certain what locations, we go through, if you visited Houston or if you visited Dallas a couple times and you kind of have an idea where you want to stay, we kind of discuss those areas, what's in the areas. I can't, because of, restrictions of real estate, I can't go in details of where is a good school, what are the good schools, things of that nature, what are the demographics. I can't provide you that information, unfortunately, but I can tell you that this is an upcoming area and this is what you can expect. Now, there are some sites that you could go online and determine what the demographics are, but I can't say, okay, over here, there's a lot of Asians. So if you want to be around Asians, then you can be on this side of town. Or if you want to be around, so I can't disclose those things, but I can say that it's a growing population and that if you're into yoga, if you're into working out, I can suggest places like that. And if you're wanting to be close to the highway or close to the airport, I can suggest you being northeast and things like that. So I go deeper and further in your search as a relocation specialist. So just keep that in mind when you're looking for a real estate agent. Because again, there's tons of real estate agents, but there's not many good ones. And I happen to be one of the good ones.
I can
No
attest.
questions? I'm so surprised. Y'all own homes and doing good, and
Right, right.
that's great. So we'll be coming online twice a month, and we'll just have open discussions. We'll have several different topics. I just can't see anything. That's cray-cray. Yeah. So yeah. Anything you want to discuss, Chris? Nothing?
No.
Anything exciting happen this week? Did anything happen this week that you want to discuss? Anything exciting?
No, not in the mortgage world.
Okay.
Well, we did. I mean, we did get a little reprieve on interest rates. They dropped a little bit, but
Yes. So let's talk about that a little bit. What? Yeah, the interest rates. So why can we at least explain to the people why the interest rates went up? Maybe, what's the reason? Because I know the reason, but some people may not know the reason why interest rate, has made a significant jump.
well, yeah. So it's really just supply and demand. Um, there's a lot more buyers than there are houses, right? So how do we get that to cool off and slow down? We raise interest rates. People start hesitating, right? Interest rates are high, and sometimes when we raise the interest rate, that knocks people out of the housing bracket that they were in before, right? So with the prices of houses where they are, they're through the roof. So one of the ways that we can kind of slow that down is raise interest rates, and you've probably seen that, right? People are the market is slowing down. Like, people aren't buying as quickly as they were before, right? So the tide is actually turning. It was a seller's market, now it's turning into a buyer's market.
Right.
So that's why the Feds raise and lower interest rates. So right now, I mean, the amount of mortgage applications that we were having was just insane, and a lot of loan officers were just basically just taking applications and sending out pre-approvals, and these people were never getting into contract and buying houses because there were so many people out there looking to buy a house. So now we're actually seeing people get into houses a lot faster, right? So it's not necessarily a bad thing that interest rates are going up. So sometimes, at least now, even though you might have to pay a little bit more, like on your mortgage payment, not necessarily for the house, you can actually you have a better chance of getting into that contract.
Right. You're not competing with 100 people for one house anymore.
Exactly.
So the market has slowed down. I mean, having an interest rate that has gone up, I mean, it sounds a little bit, insane, but it's controlling the market, and it gives you a better opportunity to offer.
Right.
For the offer to be accepted. Let's just say that.
Exactly.
So that's the good thing. You have to make a negative into a positive, and I feel like that's the positive.
Right. And now we're starting to see, where buyers didn't, like, the past 2-3 years, they didn't have much negotiation power, right? Now that's starting to open up again. They can negotiate with the new builds. A builder might come down on their price a little bit.
Right. Yeah, I think it's still a good time to buy because of all the incentives. And
I always say the best time to buy is when you can. So if you qualify to purchase a home and you want to purchase a home, that's the best time to buy, because I can't tell you how many people that I talk to say they want to wait, and then they come back to me because they're ready. They're mentally ready. I don't know what happened, but they come back to me and they're mentally ready, but now they're not credit ready. Something happened. They may have had to buy a new car, or something happened and they had to run up their credit card. So now they don't qualify to actually purchase the home when they qualified before.
Right.
So I always say the best time to purchase a home is when you can qualify.
Right. Yeah, for sure. All right. Well, it seems like our time is up. We will see you guys again. When are we coming back online, Chris? Do we know yet?
No, not yet, but we'll keep everyone posted.
Yeah. I don't know. What's today? The 15th? Maybe
Yeah,
like the first week in August or
yeah,
something. Well,
yeah.
yeah, we'll let everyone know. And then, of course, if you guys missed this, then it'll be on our YouTube. So I know this is like a really difficult time for people because I think it's like people are trying to settle in at home, things like that. So we may have to push it maybe at a later time.
Yeah.
I don't know.
We'll figure it out.
So,
We'll let everyone know.
yeah. All right. Well, thank you guys so much for joining us. And if y'all have any questions, feel free to DM myself or Chris. And we will be seeing y'all soon.
See you soon.
All right.